Stop scrolling for a second, because what I'm about to tell you sounds like something out of a financial thriller, but it's already unfolding in real time, and most people are completely asleep to it. Imagine waking up one morning and realizing the rules of money, the way cash moves, the way the dollar dominates the world, even the way banks and governments control financial power, have quietly shifted, not in a dramatic movie-style crash, but in a slow, strategic political move that changes everything underneath your feet while you're still living your normal life. That's exactly what people are talking about right now when they say Trump just changed money. And whether you love him, hate him, or don't care about politics at all, you cannot ignore what this actually means for your wallet, your savings, and your financial future. Because here's the truth most people miss. Money doesn't change overnight. It changes through policy, through trust, through global reactions, and through power shifts between countries. And when a major political figure like Donald Trump steps back into the center of economic influence, markets don't just watch, they reposition. They prepare. They hedge. They move billions before the average person even notices the headlines. And by the time it reaches social media, the real money has already moved. So when people say Trump changed money, they're not talking about him literally redesigning currency. They're talking about something far more powerful. The way money flows globally is being reshaped by policy expectations, trade direction, interest rate pressure, energy dominance strategies, and the psychological effect he has on investors and institutions. Let me break this down in a way that actually makes sense. Think about the global financial system like a giant network of rivers. The US dollar sits at the center of it. Every major trade, every oil transaction, every international loan, somewhere in that system, the dollar is involved. Now, when a major political shift happens in the United States, the dam gates of those rivers don't break, but they adjust. Flow speeds change. Some channels get stronger, others get weaker. And that's where fortunes are made, or lost. What's happening right now is not a simple news cycle. It's a repositioning of expectations around inflation, interest rates, trade tariffs, manufacturing return policies, and global alliances. And investors hate uncertainty, but they love predictable direction. So the moment they believe a certain direction is coming, they move early. That's why when Trump signals or is associated with certain economic strategies, like aggressive trade policies, domestic manufacturing focus, or stronger dollar positioning, the market doesn't wait for confirmation. It prices it in immediately. That is what people are reacting to when they say money has changed. But here's where it gets even deeper, and where most people completely miss the point. Money today is not just physical currency anymore. It's digital liquidity. It's debt instruments. It's derivatives. It's central bank reserves. It's confidence in systems. And one of the biggest shifts happening globally is the question of who controls that confidence. For decades, the US dollar has been the backbone of global trade, but in recent years cracks have been forming. Not because the dollar is collapsing, but because the world is slowly exploring alternatives. Countries are experimenting with trade in local currencies. Central banks are accumulating gold at record levels. Digital currencies and central bank digital currency systems are being tested worldwide. Now insert political leadership into this already sensitive system. When someone like Trump enters the conversation with strong economic positioning, it adds a layer of unpredictability, but also direction. And markets don't fear strong direction. They fear unclear direction. So what happens is interesting. Investors start shifting expectations around inflation control, Federal Reserve independence, fiscal spending policies, and trade war intensity. And all of that affects something very simple on the surface, but extremely powerful underneath: the value of money itself. Because money is not just numbers in your bank account. It is trust. It is policy. It is expectation. Now let's talk about something most people never think about. Inflation is not just rising prices. Inflation is the hidden tax on your life. And every major political and economic decision eventually reflects in inflation. If policy pushes for stronger domestic production, tariffs may rise. If tariffs rise, import costs increase. If import costs increase, consumer prices rise. And suddenly your paycheck buys less, without you even realizing why. This is where the phrase "Trump changed money" starts to make sense in everyday terms. Because if economic strategy shifts toward reshoring manufacturing, renegotiating trade deals, or prioritizing domestic industry, the ripple effect hits everything from grocery prices to tech imports to housing material costs. But there's another layer most people don't see at all: the bond market. The bond market is where governments borrow money. It is also the silent force that controls interest rates globally. If investors believe inflation is coming, bond yields rise. When bond yields rise, borrowing becomes more expensive. When borrowing becomes expensive, everything from mortgages to business loans tightens. So when political shifts happen, bond traders react instantly. And that reaction becomes the real signal of whether money has changed or not social media, not headlines, but capital flows in the bond market. Now let's bring this back to something personal. You might be sitting there thinking, okay, but how does this affect me? And that's the most important question. Because whether you realize it or not, you are already inside this system. Your savings account interest rate? That's tied to policy expectations. Your mortgage rate? That's tied to bond yields. Your job stability? That's tied to corporate profitability, which is tied to global trade conditions. Your investments? They move based on liquidity expectations and central bank reactions. So when major political figures influence economic direction, even indirectly, they are influencing the cost of your life. Now here's where things get even more intense. Financial markets don't wait for reality. They trade on anticipation. That means the moment investors believe a policy shift might happen, they start moving money immediately. Stocks react. Crypto reacts. Commodities react. Even currencies start shifting in value. This is why in modern finance, perception often moves faster than policy. So when people say Trump just changed money, what they are really reacting to is this anticipatory movement. It's not about what has already happened. It's about what the world thinks will happen next. And that expectation alone can move trillions of dollars. Let's talk about the US dollar specifically. The dollar is still the world's reserve currency, meaning most global trade is priced in it. That gives the United States enormous financial power. But that power comes with responsibility, maintaining trust. Any signal of aggressive fiscal expansion, trade restructuring, or monetary pressure can influence global confidence in the dollar's long-term stability. At the same time, if markets believe the U.S. economy will strengthen through domestic growth strategies, the dollar can actually become stronger. That's the paradox. The same policies can create both inflation fears and currency strength, depending on how investors interpret future growth. And this is exactly where smart money operates, on interpretation, not headlines. Now let's talk about something even more overlooked. Retail investors, meaning everyday people like you and me, usually react late. By the time financial news reaches mainstream audiences, institutional money has already positioned itself weeks or months earlier. That is why some people feel like the system is rigged. But it's not rigged. It's just faster at the top. Information flows are unequal, and reaction speed determines advantage. So when a phrase like "Trump changed money" goes viral, what you're really seeing is the final stage of a much earlier financial repositioning that already happened behind the scenes. Now let's make this practical. If you're trying to understand what to do with all of this, the worst thing you can do is panic. The second worst thing is ignore it completely. The smartest approach is to understand the direction of liquidity. Because money always flows somewhere. It doesn't disappear. It rotates between assets, stocks, bonds, real estate, commodities, crypto, and cash. When uncertainty increases, money often moves into safety assets like bonds or gold. When confidence increases, it flows into risk assets like stocks and crypto. When policy shifts suggest inflation pressure, commodities often rise. So the real question is not, did Trump change money? The real question is, where is money flowing next, based on political and economic signals? And right now, that question is more important than ever, because we are in a period where global economic power is being renegotiated in real time. We are seeing tensions between globalization and nationalism, between centralized monetary systems and decentralized financial systems, between old trade alliances and emerging economic blocs. And every one of those tensions affects the value of your money. So when you hear dramatic headlines, don't think in terms of shock value. Think in terms of flow. Think in terms of direction, because money doesn't care about politics. But money absolutely reacts to political consequences. And that brings us to the final truth most people don't want to accept. You are not just watching financial history. You are inside it. Every policy shift, every market reaction, every global negotiation, it all eventually filters down to your daily life, your purchasing power, your investments, and your financial freedom. So when someone says Trump just changed money, don't dismiss it as hype, and don't accept it blindly either. Instead, translate it. Ask what changed in policy expectations, what changed in investor behavior, what changed in global trust dynamics, and what that means for the flow of capital. Because once you understand that, you stop reacting like the crowd, and you start thinking like the system itself. And in today's world, that difference is everything.